Hello, folks, and welcome back to another episode of the Daily Crypto Byte. Today is Friday, February 18th, and we are wrapping up another week here, but not without some closing volatility here today. Dipping below 40K before bouncing back above 40K. Quite a wicked wick there, CJ, on the 1 minute chart. But we'll dive into that. I mean, traditional equity is looking a little bit shaky this morning as well. That's clearly translating to some sell pressure for Bitcoin. But we'll talk about that and a whole lot more before we get started. CJ, how you doing today, my friend?
Doing good, Monty. A lot of really interesting price action here. Just a few moments ago, we dropped below 40, went down to like 35.9, and then are right back up at $1,000 within the last 10 minutes. So a lot of volatility this morning. There were reports of sirens being heard in Ukraine. Obviously, that's not helping markets with any kind of certainty whatsoever. But we're trying to put that aside and just go into the charts and try to determine some critical levels and some other things. But we also have some interesting news. I mean, Ukraine legalizing Bitcoin. What are your thoughts on that, Monty?
Yeah, I guess we can start with that. And, it's crazy because we've been more or less kind of inundated with good news in terms of Bitcoin alone over the last couple of weeks here. And this one broke last night. CJ, Ukraine legalizes Bitcoin. This is on NASDAQ's website. I'll go ahead and post this link in the chat for you all so you can read this article. But essentially, it's pretty straightforward. The country's parliament backed in a final reading an updated bill to legalize Bitcoin and cryptocurrencies. And as of this morning, it is now legal as Parliament has approved it. It's still not a legal tender, but it is legal to own and to transact Bitcoin. It's officially put in the legislature. So that is, bullish news, but obviously, kind of being outweighed by the more global macro concerns. But another interesting headline that also has to do with this has to do with Russia, not Ukraine. But just this morning, Russia's finance ministry kicked off their public comment period. So the Ministry of Finance of the Russian Federation has officially initiated work on the country's cryptocurrency regulation bill. So just yesterday, they filed 2 development notices announcing the start of the process developing a legal framework for activities related to transactions with digital currencies and their issuance. So, 2 back-to-back positive headlines, and it's, kind of ironic that both of those involve the 2 countries that are, kind of on the brink of war here and are really driving this market, with the fear around their, tensions that are rising. So, positive news seems to be kind of being cast aside for the time being with the fear of, just kind of what we're seeing in these global conditions. But, those are just 2 interesting headlines here this morning. But what are we seeing from a, technical price perspective, CJ?
Let's jump in. So yesterday, one thing that we had focused a lot on was these Bollinger Bands, or excuse me, the Keltner channels on the 1-day time frame. These primarily just the midpoint here is a level that ideally during uptrends you want to hold. It is something that you want to be able to essentially like build upon and buy off of these dips as support as the trend kind of continues upward. You could have done that really all throughout, July after those months, and then once again going up through the basically the entire parabola. You're above that midpoint of the Keltner channels, and you could have bought the retraces to the midpoint even here, kind of as a nice buy the dip. The unfortunate thing now is that we're not trending. We're much more range bound than we were currently, and basically what we're seeing is like not any clear distinguishable trend being able to form. We were thinking that after we had actually broken above that midpoint, found some support, and started to trend up with kind of a new bullish bias in the market, maybe that would change things and put us on a track similar to kind of what we experienced going into the summer following the recovery from 29K. However, with geopolitical and just macro uncertainty kind of looming here, that bearish engulfing candle yesterday closed us below that level. And so historically, when trends typically close below that midpoint after being above it for a reasonable amount of time, typically it results in like local downtrends just in the interim following that particular event. So just something that's not entirely bullish due to the fact that we've now lost that level. Also, when you look at the macro trend scanner, this flip to like a bullish posture is starting to look more like a fake out now. Even though we didn't have any fake outs throughout this like short trade period ever since November. But right now, if you take a close look, you can see that this 8 and 22 crossover is looming for the bears to initiate kind of a short trade. So I'm not saying right now is per se the optimal time to enter a short. A lot of times what happens is that you'll get a crossover, and the crossover is a result of previous price action. It's a reflection of previous price action. So after an extreme crossover event happens, you get maybe a little bit of a reaction rally. Here, I'll draw it. It'll make it more clearly. Like perhaps we kind of consolidate. You get the cross, then you get like one more push up, and then if you see weakness after a rejection at that level, that's where I would look to short and potentially just look for continuation to like the bottom of the range at 36, something like that. But that's really what is looming in the technicals, in my perspective at this point.
Yeah, CJ. And one thing that we talked a lot about yesterday was just kind of an hourly chart perspective. And I think the hourly chart looks particularly interesting today. I mean, look at these wicks. I mean, just the last 2 hours here, like you said, we dipped below 40K, quickly bought up here on some strong bullish volume. But, with that momentum from those buyers, that was also sold into pretty quickly here. And, just to zoom out to provide a little bit of perspective, again, this is the 1 hour chart. One thing that we were talking about a little bit yesterday was kind of the critical nature of this 41K level and what a breakdown below this level might spell for, interim price action. Right now, we are finding a little bit of support at this level here, right at 40K. But, as you can see, just look at, these two candles that preceded this critical level of 40K. I mean, they were sharp moves up on the back of short liquidations, at the start of February. And, really what we often see with these sort of formations is when you have this sort of move up through, several, zones of price action. We move from 38K to 40K. That sets up very little, critical support in this level of the 40K to that 38K range, CJ. So, I agree that if we do kind of break down below that bottom Keltner channel or, fail just to maintain this 40K level in general here today, that could spell a possible retest of 30, 38, and perhaps even, completing the bottom of this range here at 36. So just a little bit of some signs of concern here. But again, we are currently sitting right at this critical level of 40K. And one other thing that I just want to point out while we got the Bitcoin chart up is that on the 4-hour chart here, we've got a little bit of a, kind of a doji-ish candle here, or it looks like we could, possibly reverse on this candle if we can, kind of close out with this formation here. And also, one thing that was pointed out by Mr. Bob Dietrich in the chat as well is the fact that on the 4-hour chart, we have kind of an impending TD sequential buy 9 here. So if we get a kind of continuation of this bearish price action, or even just, a candle that opens up, basically where we're at right now and kind of stays neutral, that would be a 9, which would be indicative of, at least just an interim exhaustion of this sell pressure on the 4-hour chart. So, perhaps we can maintain this 40K level, but it is looking a little bit precarious, and I think a lot of it will have to do with what we see in the traditional equity markets, because those I think are looking particularly uncertain here today. So, just going to keep my eye on that. I think those tighter time frames are painting a pretty clear picture that this level of 40K is critical, and that's evident from those wicks below and above this level here.
Yeah, I mean, overall, unless you're like scalping and following news like very, very carefully on a shorter term time frame, difficult environment to trade right here. I see the spreads already starting to widen a little bit just based on the volatility. But yeah, I mean, basically it comes back down to that like 8 and 22 EMA crossover. Either you want to look at that on like the daily or the 4-hour. But daily, I think that we'll probably see maybe a little bit of a relief rally. And then if we see continued weakness, then I would look for that confirmation of weakness as a potential to potentially like ride a short to the bottom of the range at roughly 38 or 36. It's just seeming right now that I don't know. I don't know. I don't foresee any like bullish catalyst in the short term that can really prop up the market at this particular stage. Um, so that's just kind of my outlook and where I'm deciding to play things. Interested if you have any different opinions either, Monty.
Yeah, no, I think already this morning we've seen, a tight correlation with traditional equities. There was, like you said, there was that news that, there's sirens in the Ukraine and the market got really scared and Bitcoin dipped below 40K. That was, bought up quickly. And during the Doge of the day, I actually do have a couple of different, some Glassnode charts to take a look at. I think those are somewhat important at these levels. But ultimately, I think that you're right, CJ. This is just a very choppy market and, trying to determine a trend that's more than just a couple of days, I think is, a dangerous thing to get caught up in. And, it's a way to get burned here. So, I think just keep an eye on the traditional equity markets here today, depending on how we close here could set us up for, some interesting price action this weekend. But, historically what we see is, somewhat low volume, especially during or following a period of, very high volume during the week, like we're seeing here. So, yeah, I don't have much else. Anything you want to add here before we wrap up? You're muted.
No, if you'd like to hear more trade insights or analysis, you can join us at the link below. We'll be doing more member analysis after this in many altcoins as well as Bitcoin more in depth. And if you liked what you saw today and enjoy this content, please consider liking and subscribing. That helps us quite a bit. But thank you guys. I hope you have a wonderful weekend and enjoy.
Take care, everyone. Thanks for watching.